I hope everyone survived the correction yesterday. The violent pullback in the market. We were actually down about 17, 18 handles. We battled back, strong close, trading in the green today. On some earnings reports, some good, some bad, some ugly. Our Battle Creek Mission Company, Whirlpool, getting flushed. Mish Schneider, 8:35. She's going to talk about the Modern Family, the beauty trade, which she's been following. Chips still on fire. AMD, Nvidia trading up. All right, let's get this earnings show started. It's a Tuesday. Feeling good on pre-market.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, folks, let's go to the big board. Up 15 and a half handles, 64.38 and a quarter. Still kind of struggled a little bit. Didn't make to that intraday high from yesterday. The buck is back, right back to the July highs, up 21 and a half cents, 98.61. TLT perky here. Defend that low of the move. Defended again, up 49 cents, 86.36. USO. Top of the trading range, finding some sellers, down 46 cents, 76.71. Let's call GLD and SLV pretty much flat here after their pullbacks. Bitcoin, can you say consolidation? Yes, up $595, 119,605. Triple D, are you still bored with this market going up every single day?
That part's boring, but there's individual stories within that actually have a lot of excitement. We've had some volatility here. It's funny. You know, you look at this market and think, just steady, slow and steady grind north. But no, there's separation. There's big moves internally. One thing's going way up, another thing's going way down. So the SPY is steady, but everything else been pretty good trading. Decent month last month. Well, I guess we still have 2 days.
Not over. Not over.
July's been good. It's been good so far. Always July and August my slowest months of the year because you're in the dog days, especially August. It's just slower. There's usually less volatility, less news. Traders on vacation, less volatility. Usually, typically my slowest months of the year. But July's pretty good so far with the 2 days left. But lots of news, lots of random headlines. Brentster was with me there last night. Say hi to Brent. Come on here. Say hi. We know you're in the background there hiding.
Good morning, pre-market prep. Hello. Hello, Dennis. Hello, Joel. How's everyone doing
this morning? We got him working pretty hard in the STN room from 3:30, really from 4 to 5. He's just dropping the headlines as they're breaking. I mean, you know, we're coming in. We got this breaking headline, this breaking headline. He's digging. He's going. We're doing lots of news analysis. So if you're interested in headline trading, try it out on the 7-day free trial. We got the Brentster working the news desk, 10 years of experience there on the Benzinga news desk.
He's so good.
He works for us too.
Yeah, thanks, guys. Can we do this? Can we do this every morning?
I think so. We got to get
a little Brentster love. A little Brentster love, of course. Yes, of course we can. Boy, oh boy. So what's a bigger news story than your stock getting taken over and it's down, or Sarepta back up near $20, Dennis?
We could start with either. Let's start with Sarepta. It's a little more exciting actually here because you are getting some major movement here. And last night the stock got halted, SRPT. We're awaiting news, and then we do indeed get the news, and FDA allowing them to start shipments of the gene therapy Elevidys. That's going to resume. And they're saying they can send it out to people who are still walking. So obviously, if you're not walking, they don't want you sending it out, but I think most of their patients are. They also said that the boy who died recently, it was not related to the drug. So we know the stock sold off substantially from like 19 down to like 11 on what we thought was the third death, but now they're saying that wasn't related. So that's good news. All very, very good news. And, you know, we were trying to anticipate, you know, where it was going to reopen. We were using the XBI as a gauge last night because it's 0.45% because Sarepta was halted. So then we're looking at the XBI and trying to project it. And they're projecting it up about 40%. And, you know, when you look back, it's where it is now. It overshot last night, though. It opened up higher than that. which gave a good shorting opportunity in the S200. I know JV Spec was playing the short side. I was as well. Sing got up to what, Joel? How high did Sarepta?
It got over $23. It got to
that's overdone.
23.9. Hey, Dennis, do you have time to explain how you came up with that expected price, or is that something we should save for?
Well, just doing the math. So you had to dig down, and obviously there was multiple things moving the XBI last night. We had EXEL putting pressure on it, which is 2.5% of the XBI. We also had another stock. What was a small one? PL. Do you remember? PTCT. That's why we pay Brent the big bucks, and it was trading up, and it's like 1.5%. So those kind of countering each other to a certain extent, but not quite. But then you had the XBI trading up, and just with those three stocks, not much else moving last night from drug news, the XBI was trying to go higher. So then you're calculating out and you're thinking, okay, well, if the XBI is trying to go higher, it should be, down about 10 to 15 cents to account for the other ones, but it's actually trading up 15 cents right now. So that's about 30 cents of XBI, which would give you about a 0.2-0.3% move. It's or 0.25% move. 0.45 would give you up about a 50% move. So when it was trading, and it was bouncing in there a little bit there, but when it's moving up 20, 30 cents, on an $86 stock, you can kind of figure it. That's probably because the traders are anticipating Sarepta is going to gap up significantly here. It did overshoot, I believe, up to 23.88. I played the short side a couple times. I shorted it. There was a huge iceberg, and you could see it last night. Institutional iceberg sellers, Joel. There was institutional.
Really? Yeah. I mean, what levels?
Ag holders, and they were whole numbers. 22. They came in at 22, and they weren't moving. Then they came in at 21, and they weren't moving. I mean, 21 got lifted tens of thousands of shares. It wasn't moving. It might even have been more. Could have even been 100,000 shares. Wasn't moving. And so you got a big institution sitting here perched and probably bag holding the hell out of this and saying, thank you very much. I'm getting 50% of my money back here, depending on obviously where they bought. We don't know who's selling or why they're selling, but we do know there were some institutional sellers that were huge last night. So, and they were selling at 22. They were selling at 21. JV Spec was saying, I think it's going under 20. Good call, JV Spec, because it is down at 19 here now. Just bag holders all over the place. And it is good news. You get some revenue coming back in that they're reshipping, obviously. So that's the good news. The question is, though, if they get another death or if anything, it's still just, it's kind of scary at this point in time. So even though they were shipping again, even though it was great that, for Sarepta that the boy didn't die because of their drug, there's still a couple of deaths from this drug. And people who are obviously not walking cannot get the drug now either. But with that being said, stock's getting a nice lift here. A lot of people are saying it's going back to 120. I was saying, they get on board 10 to 19 to 30 to 50 to 100. I'm not getting
No. They're just there's people that bought this thing 97 standard deviations, whatever between 10.50 and $12, and they're like, first bit of good news, we are out of this. And we're, and that's the problem when stocks have these precipitous declines. You have people that just are buying it now, 10, 12, 14. They could care less about 25. They could care less about 30 or 40 or 50 or 80. They're just playing it. But yep, so it's on the fade. I mean, it's hard. Big gap in here now. A news stock. I mean, still up $5. So last time it had the big pop and never even saw those pre-market levels. So what could be more disappointing if you're playing a stock for a takeover, right? Oh, I'm going to get 315, 320. No doubt. That's where I'm going to get when the deal comes. And you get a takeover, stock's down $7.
Yeah. And you were all over this. You kept saying antitrust. This is not going to be an easy deal to put through. We were saying when this thing went up to like 305 on the rumors, I said, this is one of the stupidest moves I've ever seen here too, because I said, even if it goes through, I think I said, it's not going it's going like 320 tops is what I said. So they kind of got the top end of what I thought that they could get. This was last week. The rumor comes to fruition. So props to Semaphore and also the former Bloomberg. What's his name? Do you have it in front of you, Brent? The guy who originally broke this rumor, because it wasn't Wall Street Journal. Everybody giving Wall Street Journal props. This came a day before from Semaphore, who was a former CNBC reporter. He was a former CNBC reporter.
The reporter's name is Rohan Ghazwani.
give props to Rohan, who was the first to break this. So props for him. So first giving that credit where credit is due.
Yep.
You got to be thinking, though, to Joel's point, that this is going to be a hard deal to get pushed through. This could take years to go through. So you have two things happening. One, deal may not go through. Two, the time value of money. Time value of money is always worth something. If it takes years to push this through, that makes it tough here too. So anyways, that's where we're at on UNP and NSC. Deal is for one share plus $88.82 in cash. So going forward, UNP NSC probably going to be linked dollar for dollar. Like UNP moves up $1 and NSC moves up $1. My daughter's having problems here, so I'm going to let you talk for a second.
Okay. All right. We are looking at the price action. First, we look at the NSC. Dennis was talking about the fundamentals. Bretzer, could you do some research? Is there anyone working on a robo train? Are we going to have a robo train?
I like the thought.
I don't know. I mean, I don't know how excited I am about this. I mean, obviously, there's a nice premium being paid here. You think about, the railroads. I mean, we talk about a very old industry. Is this a merger out of, out of survival in the long term? Who knows? Concerning price action, the ARBs are they're saying they don't want to have anything to do with it here. But if you have faith that the lawyers are going to get this pushed through, you're looking at, $50 discount there. That's more than taking into account the time value of money. And I don't know, whatever those lawyers' bills are going to be, but there it is. Price action. When these rumors started, it was back around 260. So there's your possible risk in it if the deal is taken off the table.
Think about how long Chevron and Hess, think about that.
Oh my gosh.
It was years. I think it's similar timeline here. This is not getting pushed through in a week. So that's the story here. So I think it is a pretty good discount. There's a chance this administration could push this deal here through, but there's also a chance it could block it as well. None of this story has a sexy AI story here to it. A sexier A story, though, you said robo-trains, but robo-taxis here, Joel. We've got an Uber headline that's not great for Uber, but it's with actually Avis Budget Car Group is got a deal with Waymo to move to Dallas. So Waymo coming to Dallas. You Dallas people who are listening out there, you guys are going to get some Waymos here, and they're going to be brought to you through Avis Budget Group, CAR. And CAR got a nice lift last night on this. Was trading up to 223. Those algos always overshoot. Up to 223. It's pulled back down to 214 here now. Hurts up a little bit here in a sympathy play, but it is the deal with CAR. The trade last night, though, off of this was Uber. I shorted this last night in the STN room. 90.40. I've already covered here now. I just covered this morning and took 2 points off of it. So nice trade right there. I'm also short Lyft, but Lyft hasn't moved down at all. So it doesn't look like that one's going to respond. Uber is the response. The one thing I would say is, just on the Uber chart, we often talk about this analogy in the STN room. I keep saying it because we're doing all this talking in that room, is we talk about setups. And we look at the chart kind of, and when the news hits and it's got like a setup to the downside, it's more, impactful here. And if you look at Uber, I think Joel can see the pattern I'm looking at here. The little head and shoulders from the last month. You got the little left shoulder in the 90s, then the head up at 97. The right shoulder's been consolidating at 90. Now you get a headline that isn't great for Uber. I mean, you got competition coming into another one of your cities, and they're going to continue to expand, and Waymo's going to continue to provide competition for Uber. And that's why you're seeing the breakdown and the breach of the 90 here now. So it sets up a little bit more well. Now I'm out of the trade already. I took my initial 2 points out of it. But, I could see this thing going down. And, obviously from technical basis, you're the technical analyst, but I think the setup actually is to the short side here on Uber. And if Waymo continues to expand with car or in other cities, in other places, it's probably not great for Uber.
Uber, I can't remember. Brett, maybe you can look and see what the news was on June 23rd. That went from 85.24 to 91.65. Left a gap in here in the market. Did it get there in the pre-market? Boom. Pre-market low is 88.24. This gap area is 87.91. So still holding that gap up area, kind of losing the 50-day. boy, a breach of that gap low, maybe not today, takes you down to 85 and a quarter. I mean, it's hard to say, what officially the story is over until you get some sustained closes here under the 50-day. That comes in at 89 and a half or 89.45. So see if the Bulls, got a good chance to, get back above that today. It is a love stock. Gap fill would be 90.24, but you really held that 90 support for a while. And now you get some bad news. So, and people have not been, the Lucid deal. Look what they did. Look, Lucid got the pop and the drop. They really not understanding the Lucid deal.
I don't even remember the Lucid deal. I know we talked about it, but what was it? It was like from a week ago. Lucid deal with what? Do you remember what it was? I'm throwing you under the bus, but I don't even remember. I have to go back and look. Maybe the Brentster's in the background. What the hell was the Lucid deal?
The Lucid.
I'm always in the background.
What was it? What was the Lucid deal that they liked?
No, they questioned it. It's the 17th.
Lucid Neuro Uber partner on next gen autonomous Robo-taxi program.
Partnering with Uber. Okay. Lucid was partnering with Uber.
Don't forget Neuro.
And Neuro too. Okay.
There you go.
I mean, these deals, when they get these deals, like, is this really going to move the needle for Avis budget? Probably not. But you also got a stock that's been in this, huge, uptrend here. And, the stock just wants to go higher. Sometimes, you get catalyst. Stocks want to go higher or they want to go lower. Car simply wants to go higher here because the charts has been moving straight up here for basically, I mean, let's just be honest here. We keep giving Hood, the credit and all these other ones. This move in Avis budget group, this is one of the biggest moves this probably company has ever seen. I mean, Car has moved from April lows of 50, well, I guess $62, call it,
a little to
210. That's a huge move in 3 months. This is like a decade of gains in 3 months. So I don't know. That's way overbought. That's like overbought territory, like crazy. But you get another headline, and it pops it again. So the momentum traders are in there. But man, if that ever breached 200, it'd probably be a pretty good short.
When I think about these deals, I hear these things. I mean, okay, so everyone's heading over to the Avis counter right now at the airport and renting a car. I mean, a Robo-taxi. When are these things going to actually be delivered? Boy, oh boy.
The Robo-taxis go. Like, it's not like they're out there. They're out there. This isn't just rumors here. This is like, this is going to happen. I don't know the date, but I bet you it's not that far, Joel. I bet you it's not that far out. I don't know if we have that information here yet, but
no. But I'm just saying,
I bet it's this year.
Yep. He got a high, boy, not much volume, traded up to 222.47. So I think that if you get a look at that level again, not much on the dailies, but still up $8. I mean, don't come in if you were, if you had a 210 target and say, oh man, I missed this thing. Very little volume traded up on that headline to 222.47. The recent, what will be important for today is if this can still hold 212.09. That is your high so far for the month of July. So
and remember, Car reports tonight. So CAR reports tonight. So that sets up interesting here too. And the bar, to Jay's point, is super duper duper high. And this is going to be a good segue that Jay's giving us here, because now we're going to go into earnings, and there is a plethora of earnings here once again. And let's just start with the high bar ones from this morning. Probably no bar higher than, well, there's lots of bars that are higher here. But RCL, you got a stock, you got a cruise line. This isn't an AI stock, folks. This is a cruise line. Cruise line has doubled since April. $164 to $352. That's a bar, because this is not some super sexy AI chip name. This is a cruise line. So cruise line has doubled. These earnings were fine. They were fine. They actually raised guidance. This is just the perfect example of a bar too high, because RCL is down 5%. And, you're going to have like people on the media saying, oh, well, it was because of this. Oh, it's because the Q3 adjusted EPS is a bit light. It's going to not say anything. They're going to find the fundamental reason. Ignore everything they say. It's stupid. It's the bar. The earnings were fine. 438 versus 405. 4.538 billion versus 4.536 billion. That's a beat on the top. That's a beat on the bottom. Yes, Q3 is a little bit light from where it was, but Q for the full year, which is everything, they're raising that. They're going from 1455 up to 1541 on the low end. So they're actually raising the fiscal year guidance. That's a beat, and a raise. Stock's down 20 bucks. The bar simply too high.
You were, was it Southwest that had a couple airlines that LUV I know took a hit, and AAL took a hit, and I can remember you specifically saying, "Boy, well, it hasn't hit the cruise lines yet." Well, it is hitting it today.
It hasn't hit the cruise lines yet either, though, because it wasn't bad earnings. So, like, what if all of a sudden we do start to see a slowdown in bookings? Then you're in trouble, because that's not what we saw here. We saw simply pretty good earnings, just the bar too high. So, I mean, you got to start thinking about, like, these moves have been pretty substantial here off the lows. Like, when you've got a stock, a cruise line, not an AI stock, a cruise line that has doubled in 3 months. These are big moves, folks. These are years and years of gains. Like, if your cruise line stock doubles every 3 to 5 years, it's going to outperform the market. When it doubles in 3 months, it's probably a ring the register opportunity. Man, these stocks have just moved so far.
Oh boy, these are, I'll give you the pre-market low 330, nice round number, only bounced a $1.79 off it. And this is for today only, Alex Anderson. I'm looking at this 327, 328 area. You had 4 lows between 25.60 and 28.94. So there's a lot of lows in the same area. That's below the pre-market low. If you're holding out for that area, well, may not hit it today or tomorrow. I don't think, just with the big move. I mean, think was 260 in the latter part of June. There's still people sitting on a ton of profits in these stocks, and it's turned. And I just don't think it's going to be the one that just, after those monthly bars, just turn around, snap back, and get all the gains back. But nice move, consolidated up there near the all-time high. They came out with some good reports, and just a super high bar for RCL. Couldn't do it. CCL taking a little hit in sympathy, only down 68 cents. Tons of support in this one at the 28.50 area. Actually got close to that in the pre-market. Let's take a look at VIK. Woo, up near all-time highs, so pulling back 48 cents. And then the one that's kind of been left out, a little bit of a rally recently, NCLH trading down 76 cents, 23.12. So there's a look at your cruise lines.
Let's go to Spotify. This one's a big one. It's not so much of a bar, but this is like, the bar wasn't super low here either, but stock wasn't really having a high bar as much as some of these other ones, hadn't run up nearly as much. Obviously, we've talked about this one, for stocks 550 to 700, hardly run up at all, really, when you think about where we were in April. This earnings are not good. I mean, on the top line, it looks fine, 4.94 billion versus 4.28 billion. I don't know what happened on the bottom line. If there's some adjustments here, I did not dig in to see, but we're seeing a full-on miss. They expect to make $2.11 in the last 49 cents. There's got to be something in there, maybe some one-time items or something that are changing over. But guidance here, not great either. They see Q3 sales at 4.94 billion. Analyst estimates were up at 5.15 billion. So that's a lower on the guidance here as well. And Spotify, which commands a huge premium, obviously, and a high multiple here. That's not what you want to see. It's starting to see slower growth here. So Spotify getting hammered here today, down 50 bucks. Somebody was really nervous about this last night too, because you often see stocks get bid up ahead of reports. It was bid up for a few minutes last night, and then it just was offered all night. And then tonight, but today, bang, stock loses 50 bucks. Ugly, ugly, ugly Spotify.
Down 49 bucks. And Dennis, when I remember when we saw the reaction to the Netflix earnings. Actually, you've made we can get rid of that retracement because it's no longer valid as you make a new low of the move. But you were like, yeah, this might not be good, for Spotify. Whew. Wow, pre-market low. They whacked this thing down to 638.13. So you're $14 off the low. Going to the dailies, trying to find some support here. The next daily low I have is 637.20, and got near that in the pre-market. But you got a pretty substantial bounce off that pre-market low, so I think that may be defended. Probably over the expected move here with Spotify. So just maybe a little saturation on the numbers, people adding the service. Maybe things are getting a little tight. Maybe they're cutting back here.
Well, it's one thing to consider here too is, I mean, if you were a little tight on your budgeting and maybe we're starting to see, I think that's low hanging fruit to cut a music service. So, I mean, there's something to think about there as well. This is not recession resilient stock that people are going to keep their Spotify no matter what. People are keeping their iPhones no matter what. They're not keeping their Spotify no matter what. So, I mean, we're starting to see a little bit of teetering here. So, nothing scary, nothing, but, this is, something to note. I mean, if we start seeing a pattern, we start seeing, economic sensitive companies start to project a little bit of a slowdown, that could be like, oh, the consumer is getting a little bit stretched. So I would say just to note at this point in time, Spotify. Holy, Joel, so many earnings here. We can go anywhere with this. Let's go to last night here. We get Nucor warning too. Nucor, big steel stock. I have it in my long-term portfolio. NUE. Give you the numbers here. 260 versus 229, 8.45 billion versus 8.51 billion. So the bottom line was good. The top line is a miss. They expect Q3 to be nominally lower than Q2 due to decreased earnings in the steel mills segment and similar earnings in the steel products and raw materials segment. So they're not liking. The guidance here is not good for Q3. And that is why the stock is down $5 here. So the earnings were fine, but the guidance not good. Still a little bit of a slowdown here for NUE.
Let's see. We're trading down in the pre-market, down 563. Running into the report, right? Made a new rebound high yesterday at 147.15. Now we're $10 away from it. A little bit off the pre-market low. I'm looking at 140 was support, but now really the big support, if it gets down to this 135, 136 area, 135.60 was a low, and also 134.38. So we'll call that 135, still way above the 50-day. You got another $3-4 to get back down even to the 135 area. Gap fill here at 144.06. So you got a ways to go to get up. 50-day way down here at 127.65. I mean, where are we at? Where are we at with the economy? Where are we at with building? Where are we at with steel? I don't know.
It's mixed signals here a little bit. I know S&Ps are still resilient. The AI trade holding us up. We haven't seen anything. But I still think in the second half, I think you're going to eventually see Q3 a little bit weaker, as I think people start to get a little bit more stretched. I don't think it's going to be easy sailing. Obviously, lower interest rates would help. So if we do get a lower down in September, maybe that changes things. But I don't know. I'm just being a little bit cautious here going in the second half. Nucor, none of these earnings reports and the reactions to the earnings. It's not even about the earnings reports. It's often about the reaction to the earnings report. We always talk about that. Like, you have good earnings. Like IBM was fine. The reaction wasn't fine, though. So the reactions to these earnings reports haven't been great here either. The reason we keep holding up is you have this relentless bid in the AI trade. It is the reason. I mean, yesterday, breadth was not great. S&Ps are fine. Why? Because AMD is ripping higher. You got NVIDIA ripping higher here this morning, too. NVIDIA ripping higher here yesterday. They are just full on the AI trade, which I love. These are the stocks I have in my portfolio, too. That story is not going away, and that story is sexy as hell. Those are the stocks. Tech trade continues to hold up this market, even though we have cracks happening in some of the real economy stocks.
Yeah, IBM's up off that low, that earnings day low, they're working to fill the gap a little bit. Let's go to the disaster of the day, Whirlpool. Holy mackerel. Getting absolutely destroyed here in the pre-market. This is one of the biggest moves I've seen in Whirlpool. It's a big old miss, $1.34 versus $1.78. 377 on the revenues versus 3.896. Guidance chopped from 875 to a big old range 5 to 7. The estimates were at 781. Cut, a miss, a cut, and a cut. Whirlpool down $17. Are people just not buying these old machines anymore? And everyone's buying Shark Ninjas up just right near an all-time high. Whirlpool, Benton Harbor, Michigan company getting absolutely destroyed. It's going to be hard to call a bottom in this one. Your June low was, wow, this made a lower low after April. What a weak stock. June low 76.
This guidance was an epic disaster, Joel.
Oh,
like
Lord.
This is not just a little bit of a lower. They see EPS for 2025. Analyst estimates were up at $10. They're seeing 6 to 8. So you're talking on the lower end, like a 40% cut to guidance on the bottom line. That is significant here. Maybe tariffs, we'd have to dig into that. If that's part of it, I do not know. But holy crap. I mean, the stock is down 17 points because that is a serious cut to guidance. And that's down 17% here right now. So this is one of the biggest, moves the Whirlpool probably in down has ever seen. I mean, this is a huge move. This is a buy the dip opportunity. They've got a nice dividend and stuff there too. I don't know. I mean, when you see a guidance cut like that, usually the stocks don't bounce right back.
Wow, 78.76 was your April of 2020 low, your March of 2020 low, when no one was going to buy anything ever again, was $64. So how many stocks that you follow like back near their 2020 2021 lows here? So boy, oh boy, still hanging out at the pre-market low. We did have someone, before we go to our guest here in just a minute, we did get someone asking about APLD, and I just want to look at that before. Man, Applied Digital Corporation company. I don't know much about this one, but I'd like to, trade it down another 25 cents. Let's hold $10. It's had a nice run up recently from 9 to 12, a little pullback here. The Bulls made a little bit of stand at 9. Let's see if they make it at 10 here for APLD. Don't have much to add on that one. Boom. And Mish is in the background. Does she look ready to you, to Brentster? Yes. Mish Schneider, CEO, MarketGauge, Mish.
Good morning.
Pull it back. Mish, Market Minute. Mish, how you doing today?
I'm good. Just waking up.
Yeah. So you're a couple hours earlier. We always appreciate you getting up bright and early to come to the show. Let's talk broad here for a second. We do have the S&P, the Spider, and the triple Qs just breaking out, making 2 all-time highs, but you're seeing some divergence with the Dow Jones and IWM.
Yeah.
Why aren't they playing nice?
I'm not necessarily sure why. I would think that there's still a lot of fear of tariffs and inflation that have something to do with it. But it is interesting to me because I'm hoping we're not seeing a repeat of what happened in January. It looks a little bit stronger than it did then. But nonetheless, what happened, we like to divide the year into 2 6-month tranches: January 6-month calendar range, July 6-month calendar range. And the July 6-month calendar range reset in the middle of July, number one, and number two is in January, after we had that in a strong admin year. Usually when there's a new administration, it goes very well. We had that initial rally in January. Everybody got like super bullish. And then granny retail started to roll over, IWM, and then of course the whole market followed. So what we're seeing now is not quite as similar, but still something to keep an eye on, which is SPYs and Qs are just flying through, but IWM still hasn't gotten through or held over the 6-month calendar range high, which is around that 226, 227 level. XRT is flirting with it. It's around 81.70, but it still hasn't convincingly gone through. So that's grandma and grandpa, right? They're still not involved. And if the whole notion of this administration is to bring things back to the domestic US, we have to see the small caps and retail involved. Now, they're not uninvolved. They're just not fully involved yet. And then transportation is in the middle of the range. IBB, believe it or not, maybe today will change the equation because of Novo Nordisk, but that was above. Semiconductors are just scraping above it. It has to get through, well, today it'll gap up above it, 293. So, we're like sitting there. And so what does that tell you? Either this is going to be a SPY queue, keep going, and everything else will just kind of hang out, or the others will start to catch up, or the others will roll over because the selling starts to come into the market for whatever disappointment that happens, and everything starts to roll over as well. We don't know that yet. So I've kind of been sort of a little bit of a laid back ride here in the summer doldrums, low volume, until we see more clearly.
And what kind of technical indicators or what kind of timing are you using to for these moves in the IWM and also for? I mean, I'm looking at the monthlies, and you look at this monthlies in the diamonds, and I mean, there is just 1, 2, 3, 4, 5 monthly highs in the same area. IWM not as clear on the monthlies moving up. Is it more of a timing thing or more of a price action?
I'd say a little bit of both. And this is not to say that I'm bearish at all. I mean, this is a market where clearly what's been so interesting is how the retail investors have taken over. There's a vibe on a group or a vibe on a stock. It goes up. It doesn't even really matter. In fact, the smarter you are, maybe the more disadvantaged you were this year. You know what I mean? The more you overthink things, you miss the boat. So, when it comes down to small caps, I'm not trying to overthink it, but what I'm saying is that when you have that line in the sand, and that would be on a daily basis, this 226, 227, and we keep trying to pop through it, but we sell off, at least it keeps me from screaming rotation, certainly not, AI-driven market, absolutely, with certain pockets here and there that are also doing well, and C, I could totally shift. We could either see IWM blast through, in which case I think you'll have a tremendous opportunity in a lot of stocks that haven't participated, or this could be the big ball and chain, and that's where the patience and the timing is, but that's also where the price comes into it.
When does common sense start working again here, Mish? Or didn't the markets never trade on common sense? Maybe they never did.
They never really did. I think it's really this year, though, screaming in your face, like, guys, stop overthinking. I mean, people start to look pretty foolish. All the cycle people and all the economists and, the bubble doom and gloomers, we're going to have this bubble. We're going to have that bubble. We're not having any bubbles. And in fact, that doesn't mean we won't. The things that I like to look at is like the small, the long bonds. We've talked about the long bonds. I think the last time we talked on STN, I said, I think TLT bottomed. I think yields are going lower. It was the most unpopular opinion at the time. And now look where we are. It looks like we're flirting with that 50, and it looks like we get through 87 in the TLTs, it's going to go. And the question is why? Does it make any sense? No. But what we know is that this is what this administration wants. They want lower rates. I mean, every other headline has been Powell needs to lower the rates. He even went to visit Powell last week. God knows what they're talking about. But what we know is yields are softening. FOMC is tomorrow. I don't think anything dramatic is going to come out of it, but it doesn't matter. If the momentum starts to go in the way of TLT's rallying, don't overthink. Follow it. And then think,
Mish,
what happens with yields going lower? Go ahead, Dennis. I'm sorry.
What happens when Powell doesn't lower rates tomorrow? Because he's not lowering rates tomorrow. We looked at the Fed tool and there's like a 2.5% chance. I mean, they're not even, the commentary, hasn't even really went to talk about lowering rates here yet. There's still kind of almost a neutral stance here. So there's no way they're lowering rates. Trump believes, because he even says, I think he's going to do the right thing. He tweeted that like yesterday. Yeah. So Trump is going to lose it when Powell does not lower rates tomorrow. He's actually going to go on a tweet storm. Like, this is not even like a prediction. This is almost to a point where it's probably going to be fact. He's going to go on a tweet storm tomorrow night. What does the tweet storm do when he calls late? And then he starts to talk about firing him again and doing all this stuff. Does it spook the market, or does the market just ignore it?
I'm not so sure that's going to happen, because whatever they talked about last week, I'm sure it's not going to be the big shock to Trump, whatever Powell does. And Powell may have said to him, listen, we got to keep things status quo for right now. And if everything looks okay, we'll lower them in September. And Trump might have been all right with that. We don't really know what happened.
I don't think so. I'm on the other camp on that one.
All I could say is that whether he lowers rates or not, whether Trump goes on a storm of bashing Powell or not, what we're seeing is the trend has flipped to higher yields or stay pat yields to lower yields. And now it's just a matter of the velocity of how fast we get lower yields, and then what happens in terms of the Fed backing that up. I think perception, this is exactly what we're talking about. Perception is everything. Yeah. And if the perception is that no matter what he says and no matter what Powell says, he's still going to get the way of lower yields, and I don't even want to argue whether that's a good thing or a bad thing, then lower yields are going to come. And I think that's what you've learned this year. I mean, he's banged everything he's wanted. He's been banging about and very transparent about, Bitcoin, Ethereum, stablecoin, the big beautiful bill, the tariffs. Everything has been really basically turning out to be exactly what he says, which is an unusual situation that the leader of the market turns out to be the president of the United States, but don't fight it. So I don't care what happens tomorrow. I think if these TLTs can get through 87, we're seeing the writing on the wall.
Does the market need lower rates? Do we need lower rates at this time? I would, am I this old school that, you need lower rates at a time when an economy is stalling? I mean, where are we? I mean, of course it gets debt down and it helps companies, but I mean, it's like what happens if we really go into get some bad numbers? Do we need lower interest rates for this market?
Well, again, it's yes and no. There are certain pockets of the economy that would certainly benefit from lower rates. I mean, we're looking at housing, right? That would be the obvious place. You might see a boost in refi and new buyers coming in, trying to lock in anything that happens with lower rates, fearful that it won't last. In terms of debt and things like that, I mean, that's the biggest thing, is that our second largest expense in the United States is the interest payments we make on our debt, which of course we know is huge, approaching 37 trillion. And with lower rates, it makes it a more affordable way to pay down that debt. Some people are saying he wants a level of inflation because you can inflate your way out of the debt. I'm not an economist to be able to explain that to every nuance, but it kind of makes a little bit of sense. If you get people spending more money, but the dollar right now is strong, so you've got stronger, let's just say, not strong. So it's I think that it could goose inflation, but what I'm saying is inflation I don't think he cares about a 2.5% or even a 2% inflation. Years ago, I found this brilliant guy who wrote an article about at some point they're going to change what their expectation is for inflation rate from 2% to 3%. Because if you have a growing global economy or a growing US economy, 2% may not necessarily be realistic. So who the heck knows? That's, you got to be prepared for everything right now.
Okay, you talked to us a while ago about the beauty trade, and boy, Michael Berry hopped on it here. I'm looking. Estee Lauder's had a move up from 55 to 93. Elf Beauty, I don't know if that. Yep, that's participating in it as well. Ulta,
Yeah.
Yep, Ulta Beauty here.
Like people haven't talked about this stock. I'm amazed. This stock has gone up over $150, and yet you never hear anybody talk about it, except for maybe me and you and a couple of other people that I allow me to talk about it when I go on. But yeah, this thing has been, what is this showing you? People are out there buying makeup and hair products and things like that.
And you mentioned briefly at the top the XBI. I mean, mixed news. Nova Nordisk getting absolutely slammed today. Oh boy, on Wegovy shortage. SRPT Sarepta. I'm sure you love. You love trading that stock. But overall, looking at the IBB trying to break out here, XBI, definitely sectors that need lower rates. Wow, consolidating up near the top and of its range. And how many times have we seen this? XBI, IBB are up near the top of a range, and then they just get slammed back down again. Can these sectors get moving without lower rates?
Well, this is also in the crosshairs of tariff talk. We're going to do 200% tariffs on pharmaceuticals outside of this country. And so that alone has kept me out of the biotech space. I mean, I watched Eli Lilly look like it was going to go to the moon yesterday. The thing broke out over 810. And now with this Novo Nordisk story, I'm looking at Lilly now, it's back down to 794. Now that's not exactly crushed, but it certainly would be painful if you bought it at 810 yesterday. And I've been sort of, again, I can't stress this enough. Just listen to what is coming out of the administration and don't fade it. So when they're talking about 200% tariffs, I'm not sitting there going, oh, taco. I'm going, you know what? I want to stay out of the biotech space right now until we see, oh, well, it's not 200%. It's really going to be 10% or 15% or what have you. I've stayed, and between him and RFK Jr., I do not want to step into that big thorny mess. But what I will say is that regardless of what the drug companies do, the diet drugs, and we know, are here to stay. This will work out at some point. When that does, we'll be more inclined to get in. And like you're saying, the big impact on that has been the companies that have benefited from so many people who have already lost weight and intend to stay that way. And that's why I've been more in the retail space. Even Stitch Fix, I think we talked about that last time. It was trading at like 350. It got up to close to 550. It's coming in slightly lower today, but it's been over 5. These are the kind of companies that I've been looking at and staying away from the drugs.
Okay. Crypto. What about crypto?
Well, I have been all over Ethereum. So Ethereum, I had certainly been vocal about it at around 2,500, that it got through 2,550. This is just good old fashioned charting. It was taking out the major moving averages and was due for a move. And then, of course, all the news came out to support that, the mass adoption. So now, of course, the next level here, 3,600 is your most near-term support. 4,000, everybody's watching 4,000, and we're creeping up today, right? We're back over 38, 38.50 as we're talking right now. The trend is up. Again, I think dips are buy opportunities.
All right, earnings season. We'll let you go after this. Earnings season, mixed, some good, some bad, some ugly here. We still have the big guns to report later in the week. Give us your overall take on earnings season.
Well, so far, of course, it's been the guidance that's been the big thing, right? What people say. I mean, that's what happened with Novo. Not only obviously the shortages of Wegovy, but their guidance was soft. Spotify came down lower. I saw. I'm not surprised. There's so much competition there. I think like this week when we've got Microsoft, I've got keen eyes on Microsoft. That thing has been the comeback party. with Microsoft, and it's trading even as I'm talking to you now at like 513 pre-market. This 515 level, I don't see why that's not a $600 stock right now. I mean, how do you fade Nvidia trading almost 180? You know, this is really where it is. So as we get to these big earnings this week in tech, I don't know if not a chaser by nature, but like I said, what I'll watch is if we get positive reactions to these growth stock earnings. And then some of the other ones that I would be watching, like when retail comes up, it's not going to come up for a while. And then some of the companies that support AI, that's where I'm looking. Stratasys, I'm in that already. CC Chemours makes the Teflon coating for chips, in that one already. Symbotic has been on fire this year. That's the robotics. That's where I'm going to be interested in. If we get great earnings, that's only going to be good for those companies as well. Energy, I'm really into that. We got a lot of earnings this week with some of the big names, like Chevron, I think, reports this week. And a couple of the other ones, maybe Exxon.
Yeah, both on Friday. Yeah,
right,
both Friday.
This is right now for me, our models, our quants love momentum. Me, I've always been more of I need to know what my risk is. I think energy, we bought XLE last week at like 86. It's trading at over 88. I think this is really where, if the market's going to hold up, these are the pockets of things that support AI and the energy space that we need for AI. And my biggest contrarian trade right now is natural gas. I mean, I don't know if it can get much cheaper. Maybe it could break down under 3 in the September contract, but it's back up to what, like 312, 314, something like that pre-market. I keep my eyes there. It's just so freaking undervalued right now. And uranium is up to the sky, but we can't use that yet. This is what we can use to power right now. So that's kind of how I'm looking at earnings is what helps the things that I want to buy.
All right. Well, thanks for getting up nice and early to join us. Mish Schneider, CEO over there at MarketGauge, joining us here on Pre-Market Prep, giving us a broad view of the markets. Thanks, Mish, and we'll be talking to you real soon.
You guys have a great day. Thank you.
Thanks, Mish.
Bye.
All right. A little bit of a leak here in the markets. We still got a lot of great stocks to cover. Should we go with the retail darling, SoFi?
Yeah, they love SoFi. This stock it had a high bar too here, Joel. So no doubt that the bar was higher. But again, you're just in this retail darling driven market. So they did beat. I'm brutal because I don't have the earnings up in front of me.
I do.
Grab them, Joel.
8 cents versus 6 cents. So a beat there, 858 versus 8.
Huge salesman beat.
Wow.
Big
wowzer. Wow. Guidance from 27 cents to 28 cents to 31. That looks good. Sales guidance beat in a raise for SoFi. Up a
the stock is loved. And I mean, at a certain point in time when your retail stock is just loved, eventually they seem to go. And I mean, SoFi was the one that they just can't stop talking about in social media. And really for the last year, it really hasn't done much. But come, April, when everything started rallying after, Trump kicked the can down the road the 90 days, it's been nonstop going up since then too. And the stock has more than doubled since the April lows as well. So it's been a big mover here. SoFi loved by the retail community here. Stock breaking out, making new highs, or at least kissing new highs here right now. So that's your level 22.74, which was the high just from just going back to about 7-8 days ago. So that's your first initial point of resistance. But after that, you start thinking about 25. I'm just not chasing. It hasn't been the market to certain stocks. I shouldn't say that. Certain stocks, like its pockets, like AMD absolutely has been the stock to chase. NVIDIA absolutely has been the stock to chase. And there's other things that aren't the stocks to chase. SoFi is kind of an in-betweener here for me. I don't know if I'm chasing it or not.
23.49. That's where it got to in the pre-market trading. And you backed off $1. So I think you may have created some bag holders here. But Dennis gave you a good number. And that number, it was recent high of the move, 22.74. right there. Let's see if people are willing to sell that. I mean, also you could have it been at 23 since late in 2021. So see what the paper does. This would be another one where, like, let's say we get an open here at 22.75. They sprint, they clear out the paper at 23. They go to 23.05, and then someone locks it down again at 23. You come back down through the open. You got a ways to go to the top of yesterday's range at 21.22. Stocks not to chase, and we just talk a bad story getting worse here. UNH, Dennis. UNH just cannot seem to right the ship here.
The sector's in shambles, and they have their own investigations going on, and every single stock from this sector has pretty much lowered guidance. You started with CNC, then you had Molina Healthcare, then somebody else was in there too, and I don't even remember who it was. Elevance, correct, Joel, ELV, and then you get UNH. Oscar, which is in the sector here too, has been resilient, holding up, and I'm long that one. But UNH has just been, problems. It probably started with them, obviously, back in April, and the problems just continue here. The guidance is a disaster. The earnings are a disaster. $4.08 versus $4.95. The bar is on the floor, and they managed to dig a hole and climb and crawl under it. 408, 495, 111.6 billion versus 111.69 billion. So they missed on the sales too. And then the guidance, they're looking at 2025 guidance. They're seeing it down at $16. Analyst estimates were up at 22, so that's a significant lower as well. And sales guidance light as well. Disaster report. Company's bar was on the ground. It probably should be down more if the bar wasn't so low to begin with, but just not good. And you start, doing extrapolating multiples on top of $16 earnings instead of $20 earnings, and it doesn't look as cheap anymore either.
No, you talk about it. The sector CNC, is that thing stopped going down yet?
No, I don't know if it has.
Well, a couple of.
Oh, it did. It bounced that one more day, and then everybody on FinTwit said, "Oh, it's a buy," and it's leaking again.
And then also, what about? Just want to see. CVS was not holding up as well. That did hold up for a while under all this. Now that's starting.
Yeah, I don't like that. I've hated that stock for a long time too. I don't know. This sector is just really tough to be in. Under attack too. We're trying to get obviously drug pricing down, but they're also trying to get healthcare costs down here too. I mean, I don't know if any of this sector here has any imminent turnaround happening. If you're patient, maybe, but I'm not patient, and this market is definitely not patient. Upgrades, downgrades.
Yep.
We like to cover those every day there too. There's a lot of chasing ones here today. You got Spotify and, some of these other ones. But, one that stands out that, for me is an upgrade. Guggenheim upgrading Generac Holdings GNRC to buy. Analyst is commenting, puts a $190 price target on it. Believe that greater focus on commercial scale opportunities combined with the potential for withdrawal from the troubled residential solar and storage business support a more positive stance, raising their estimates, raising 2025-26 estimates, $190 price target. You know what else I like about this is we are now kind of getting into the thick of hurricane season. So we're going to start watching the weather. And, if we start seeing some hurricanes pop up, we know Generac has been always the best way to play that. So keep an eye. I think they're upgrading at the right time because typically you come into August and September and the hurricanes get a little more violent. Usually GNRC starts to show some life. It's already been showing some life for the last month. So I kind of like this upgrade here.
Break it out. Let's see if we can hold 157. Pair of highs right at that area, 57.33, 57.09. So if you get a little check back there, the close right there as well at 156.96. So let's hold that. I've already gotten back half of this move from late in 2024 that comes in at 150. Your next monthly level, 165.41, but always with these, with these upgrades and stuff, trading up in the pre-market, you want to see that opening print hold. You just want to see it to continue move higher, unless people are using this as a selling opportunity. Dennis, any more ratings, or would you want to talk about Warren selling some stock?
Yeah, that's actually true. So yeah, give us the news there, Joel. Warren Buffett selling
selling Verisign here, and they're doing an offering, and I believe he is giving them there's a secondary offering by Berkshire Hathaway to reduce their stake below 10%. Warren getting smart here, so they're throwing out those 4.3 million shares. It's anticipating it being at the 285, 286 area.
Is he getting smart here, though? Like, why not slowly sift it out? Why do this, secondary bang? I know it's hard to sell 4.3 million shares, but stock closed at 306. You don't think you get a 4.3 million, you work it for a couple of weeks there, you could have did better than getting 285 because that's what he's getting? I mean, that's a steep discount that he's just losing 7% on his holdings because he's, got to do it, through a secondary offering out there. I mean, I don't know. I don't know if he is getting smart here. He's selling at the highs, but man, he's taking a huge discount. I mean, there was huge support 280 to 285 too. I think he could have worked this better, this order.
But with him being over 10%.
True. You'd see it.
Yes.
So then you start seeing in the filings. So that's a good point. You start seeing in the filings, and the trader's like, oh, crap, Warren's got to sell. So let's get ahead of it. I still think he'd do better.
Okay. All right. Well, if he had us working those orders for him.
I think I could work. If you were to give me 4.3 million share, I know my buddy Joe Saluzzi would have did better for you. Joe, I'll give you a shout out there if you're listening. One of our good friends over at Themis Trading there, agency broker. He would have did better for you in this one.
Dennis, I mean, it traded 487,000 yesterday, 1.2 million the day before, 826,000 the day before. So it's but now he's under 10%, and so he can work it. He can work it. So Dennis says coming up at 9:02. We got to get the heck out of here, Dennis, and get over to the STN room, see if we can get some excitement off the open. Folks, thanks for joining us. Thanks to Mish Schneider for joining us here on Pre-Market Prep. Everyone, let's have a great trading day here on this Tuesday, and back with you tomorrow morning.